I think we'll go ahead and get started. This is Rick Martin with Fortress Federation Investments, and I'm going to give a quick overview before handing things over to our leads, Ryan Webster and Warren Dresner with Equity Yield Group. If you have any questions, the best thing to do is put those in the Q&A. If you put them in the chat, sometimes we won't see it. So definitely use the Q&A, and we'll run through the presentation and get to your questions afterwards. So welcome again. We're super excited and proud to be rolling out this investment to you. We're presenting the ShoreView Apartments 216 unit Class A 2021 construction opportunity in Bradenton, Florida. So first, a quick disclaimer. We are presenting information that we've gathered through our due diligence. You are encouraged to do your own due diligence. If you want to speak with your CPA or financial advisor in order to get comfortable moving forward. This is not the official offering that will occur within the investor documents, meaning the private placement memorandum and subscription agreement. And we will let you know how you can get access to that on the portal at the end of the presentation. So I always like to point out some keys as to why I'm personally investing into a deal before I hand things over to the operators. Number one, this is our third property in the area, and we have a proven team and strategy that has allowed us to exceed our projections by 20% on our other two properties in the market. So having the same experienced team and the same growing market gives us a high degree of confidence that we're going to succeed on the ShoreView as well. The inbound migration coupled with the lack of supply is driving up rents at a crazy rate. When I saw that year-over-year rent growth of 27.4%, I literally thought it was a misprint. But having traveled back to the market just a couple of weeks ago, this growth in rents was confirmed. The location is tremendous, literally on the path of progress as the Riverwalk borders the front of the ShoreView. Tenants will be able to walk out the front door, hop on a bike, and be into town or the marina within a few minutes. Our pro forma rents have room to grow as confirmed by our recent comp survey. We visited some of our key competition a couple weeks back, asking where their rents were and had they offered any concessions. And rents had already come up since our last visit, and the answer across the board was no concessions needed to be offered. I wanted to show this as an example of why we feel our pro forma rents are very conservative and why most likely we'll have quite a bit of margin to grow. On the left is a comp under a mile away, the 210 watermark. On the right, we have the ShoreView. As you can see, the rents are the same, but the quality of the product is quite different. On the left, we have that sort of beige Formica countertop, white appliances, outdated cabinet fronts with fluorescent lighting. And in the ShoreView, we have the quartz countertop, stainless steel appliances, shaker cabinets, recessed lighting, microwave oven, not to mention waterfront views. So looking at this, I'm confident our pro forma is quite conservative and we'll undoubtedly be able to lease up at higher rents. And this is very consistent with our two other properties that we have in the market, which Ryan and Warren are going to get into in greater detail. So for the returns, we have an 8% preferred return. 1.93 is our equity multiple. Average annual return of 18.6% with a 15.5 IRR. Rents are under market anywhere from $200 to $400 plus. We're going to collect some additional income from amenities that the guys will get into. I mentioned this desirable location being right on the new extension of the Riverwalk. Demand is far outpacing supply with no competing units coming online and the continued migration into the area. So a little bit about the team. For those that don't know me, I'm Rick Martin. I've been investing in real estate since 1997. I'm the principal of Fortress Federation Investments. We syndicate multifamily properties focusing primarily in the southeast and Texas. We currently have 1,185 units in our portfolio, and I live out here in California with my wife and two boys. As I mentioned, this is going to be our third deal partnering with Equity Yield Group. And with that, I will now hand it over to my partners, Ryan and Warren, and let them introduce themselves. Warren?
Thanks, Rick. Hey, everyone. I'm Warren Dresner. I have a background in finance and insurance. I'm based in South Florida in Miami, where I live with my wife and 3 daughters. I've been investing in real estate since 2010 and currently own around 2,000 multifamily units across the Southeast and the Midwest. Ryan?
Thanks, Warren. Hello. Those of you who don't know me, my name is Ryan Webster. I'm a real estate professional and entrepreneur. I'm the founder of Equity Yield Group, a National Home Builders Association award-winning home builder. Prior to multifamily investment, I owned and operated a construction development company here in the Midwest. I have a wide range of project experience from value-add multifamily, ground-up single-family, and commercial remodel and development. I live in Cedar Rapids, Iowa with my family, a 5-year-old son and another one on the way. The acquisition of ShoreView is a joint venture project between Equity Yield Group and InvestCore. InvestCore is a real estate development firm out of Austin, Texas, dedicated to developing industry-leading real estate projects in high-growth markets. Founded in 2008, InvestCore has successfully developed 15 projects with a cumulative value of over $654 million. Although primarily focused in multifamily, having delivered over 2,100 units to market, InvestCore is also experienced in mixed use and senior housing. InvestCore and Equity Yield Group have been working together for the past 6 months to secure joint projects in growth markets in Florida. ResProp Property Management will be handling the day-to-day operations of the property as our third-party property manager. ResProp is an experienced management firm with over $1 billion in assets under management and over 7,000 units. ResProp has a proven track record of success and has operational centers in Florida. They're familiar with the market and operate other properties nearby, including 2 other assets acquired earlier this year by Equity Yield Group. Some of you may remember, Oakwood Apartments is a 148-unit multifamily community in Sarasota, Florida. Oakwood is located 15 minutes away from ShoreView. Prior to closing on Oakwood, we did a lot of research into the Sarasota-Bradenton MSA. What we discovered is that demand for housing in the area, driven by strong population growth, is far outpacing the limited supply and scheduled deliveries of new product to the area. Oakwood, only 6 months after closing, is already outperforming our conservative NOI projections by 21%. We laid out the business plan for Oakwood. We set pro forma rents for renovated units at $1,300 for 1-bed units, $1,500 for 2 beds, and $1,700 for 3-bedroom units. On average, for renovated units, we're exceeding these rents by $150. And just last week, we signed up new leases at $1,560 for a 1-bed and $2,200 for a 3-bed unit. Bradenton Reserve is a B-class, 166-unit multifamily community also located in Bradenton, Florida, and acquired by Equity Yield back in September. Recent leases at Bradenton Reserve are exceeding pro forma rents by $400. We attribute this performance to conservative projections, a great management team, and strong market fundamentals. Given ShoreView's proximity to our other properties, we expect to see similar performance driven by the same strong market fundamentals. Warren, can you tell us more about the submarket?
Sure. So we remain really positive about the Bradenton market. As Ryan just discussed, we already own 2 properties in the market, and we're seeing firsthand the amount of migration into the area and how strong demand for housing is. So there's a large population in the Bradenton-Sarasota MSA, more than 800,000 people. The population's grown more than 27% in the last 10 years, as more and more people migrate to the area for work and lifestyle, as more and more snowbirds relocate, and as more and more retirees move to the area for a better retirement experience. Going forward, the population's expected to grow by 22% in the next 10 years. This population growth is driving income growth, which in turn is driving rental demand and house price growth. The median income in the MSA was more than $77,000 in 2020, according to HUD, 10% higher than the Florida average. And this figure has grown by 17% in just the last 3 years. If we look at income levels at the property, the median per unit income is more than $95,000 at ShoreView, more than enough to justify pro forma rents in our business plan. And it's really an attractive place to live. You can see that there are a lot of highlights that we can talk about. Number one, best place to retire. Number one, best city to launch a small business. Number one, best beach in America with Siesta Key Beach. In fact, Anna Maria Beach, Bradenton Beach, Longboat Key, they're all a short drive away. Now, net migration into the state of Florida is significant at the moment. Around 1,000 people a day are moving to the state. And specifically, the net migration into Bradenton and Sarasota is really what's driving this opportunity. This exhibit in green that you can see on the screen comes from LinkedIn. They track where people are moving for new jobs. And you can see that the Northport Sarasota MSA, which includes Bradenton right in the middle, comes in second in the US for places that people are moving. And look at the list of cities on the left-hand side of the exhibit. That's basically a who's who of hot multifamily markets in the US right now. So second is a huge achievement. And it's not just this year that in-migration has been strong. Here are a number of different sources that show that this phenomenon has been happening for a number of years now. On the left-hand side, we can see from the National Association of Realtors that the Sarasota MSA came in fourth in the most popular moving destination for families. In the center, we showed data from the US Postal Service. And this one's interesting because it shows migration during COVID in 2020 on the vertical axis and compares it to migration the year before in 2019 on the horizontal axis. Now, if you're in the top right-hand side of the chart, that means that migration was strong in both 2019 and 2020. And again, you can see Sarasota right up there as the second strongest in the US. And finally, on the right-hand side, we have a publication from U-Haul and their top 25 US growth cities. And this time they focus on Northport, which is on the southern side of the MSA. So clearly, Bradenton is an area with significant in-migration, and that has been what's driving demand and rental increases. Bradenton has a large workforce, around 350,000 people, despite lacking any one major industry. Job diversity is excellent, and you can see the breakdown of employment here. The three largest industries are education and health services, trade, transportation and utilities, and professional and business services. And this diversity speaks to the economic resilience that we've seen in Bradenton and at our other properties specifically through COVID, where economic vacancy only had a very small impact. And unemployment numbers have remained better than the national average. August 2021 unemployment stood at 4.4%, which is materially lower than the national average of 5.2%. When we look at the job market in the area, recent job growth has come predominantly from existing companies that are growing, and they're attracting migrants to the state. You can see the list of major employers on this slide, which demonstrates the stability of industry in the area, predominantly made up of healthcare, manufacturing, and schools. And a number of these major employers are situated really close to ShoreView. Manatee Memorial Hospital, Beals headquarters, Tropicana, Champs, they're all less than a mile away from the property. So earlier I talked about population growth and income growth and the fact that this is having a really positive impact on the apartment market. This growth has definitely been driving demand for real estate, which has been outpacing supply. And the result is that rent growth has been significant and is projected to continue to be higher than the historical average. You can see that in 2021, rent growth really spiked. Look at the orange bars in the chart. We've seen rent growth at Oakwood Apartments down the road of more than 27% this year. And the data from CoStar concurs with that. Even some other recent reports from Yardi Matrix also quote 27% plus seen in the market. And you can see that even through 2022, CoStar is predicting significant rent growth in the market as demand for housing continues and as supply remains limited. So the supply-demand balance clearly is continuing to work in our favor, and that makes the Bradenton market one that we really want to be investing in right now. So what does the property look like? Well, it's a fantastic looking property with a resort style pool, outdoor kitchens, fire pit. It's a nice gym with opening doors onto the pool area, fitted out clubhouse and common area that could be rented out by residents for functions and get-togethers. The interiors are clean with functional floor plans, quality kitchens and bathrooms. All units have washers and dryers. It really ticks all the boxes when compared to alternative choices that residents in the area have. The quality stands out when compared to the competition. The property is laid out simply and efficiently. The main entrance is towards the bottom of the picture by the roundabout. It's a gated community with the clubhouse, gym, and pool area just to the right of the entrance. And then the property consists of 5 four-story buildings, all with river views and park views. There are unobstructed views of Manatee River at the front. And all of the green area at the top of the picture is part of the Riverwalk, which Ryan will talk about in a moment. And parkland exists on the western side. And then on the eastern side, there's an additional park under construction, which will form part of the Riverwalk project as well. So we have 216 units. The average unit size is 1,024 square feet, which again is a great differentiator. It's a mix of 1s, 2s, and 3-bedroom units, all functional, modern, well-designed unit plans. And I will now pass it over to Ryan, who will talk further about the business plan. Ryan?
Thank you, Warren. So, despite ShoreView being a brand new Class A property, there is a lot of upside potential. As you can see by our comp survey, rents at ShoreView are significantly under market, and even our pro forma rents are a comparative value to the comp set. The upside potential at ShoreView was created by a very rapid lease-up, combined with a very strong housing market and the developer's desire to sell the property in 2021. When developers complete a new build, they're incentivized by the lender to stabilize occupancy on the property very quickly. Development projects are more focused on mitigating risk by driving occupancy than they are pushing revenue and bringing rents to market. ShoreView was 100% leased and 97% occupied within 5 months of completion, without offering any concessions. Demand for housing in the area is so strong that ShoreView signed 43 leases a month and took in over 85 applications per month. And despite leasing at this incredible velocity, incomes and tenant qualifications on the property are very solid. The per unit income on the property with the existing tenant base is $95K per unit, which is 4.5x our target market rents. Our typical income qualification for residents is 3x rents. The strong incomes of the existing tenants will allow us to very easily bring rents to market as we roll into second generation leases on the property. To put current ShoreView rents into context, our B-Class 1986 built property, Bradenton Reserve, which is 7 miles away from ShoreView, is seeing rents at $2.20 per square foot. Rents at ShoreView are currently $1.89 per square foot, and our pro forma target rents are conservatively set at $2.10 per square foot. Not only is ShoreView located in one of the strongest growth markets in Florida, but its location within Bradenton is amazing. As you can see, the ShoreView site is a beautiful waterfront property on the Manatee River. The property is minutes away from downtown Bradenton, near the Manatee Hospital and Blake Medical Centers. Residents of the property have access to a number of great restaurants, retail centers, and 2 golf courses. And Bradenton Beach and Anna Maria Island are just a short drive away. And one of the greatest features of the ShoreView site is the expansion of the Bradenton Riverwalk. In my opinion, the Bradenton Riverwalk expansion is one of the most exciting aspects of this opportunity. This is a $7 million community amenity being built literally around the property, consisting of 4 phases. Phase 1 is a Mineral Springs Park on the west side of ShoreView. This park is already under construction and scheduled to be completed in the next 90 days. Phase 2, also already under construction, consists of renovations to the existing pier and a venue for gatherings, events, and farmers markets on the peninsula directly north of ShoreView. Phase 4, which is already complete, is another park to the west side of ShoreView and an expansion of the Riverwalk connecting to Phase 3, which ties all 4 phases of the Riverwalk expansion to the existing segment of the Bradenton Riverwalk project on Riverside Drive. The top row of photos shows work in progress on phase 1 and 2. The bottom row of photos shows the existing segment of the Bradenton Riverwalk project. The completion of this project really adds to the community appeal and the value of ShoreView's excellent location. In addition to bringing rents to market rates with second-generation leases, there is an opportunity to stabilize other income by fully integrating amenity tags such as water views, screened-in balconies, and wine fridges into the rent roll. Additionally, bill back of water, sewer, and pet fees, as well as renting the garages and storage units on the property. We've also identified an opportunity to cut operating expenses by up to $60,000 by installing solar panels, which will cover the property's electrical usage for elevators, pool pumps, the gym, the clubhouse, and other common areas. Another important factor of ShoreView's location is the barrier to entry for competition. There is limited supply of developable land, and there are no new deliveries of a comparable product to the pocket. The only new delivery in the area is an affordable senior housing project, which is not direct competition with ShoreView. Expanding outside the pocket to the greater Bradenton area, there's still very limited supply of housing, with 592 units scheduled to be delivered in the next 8 quarters. Deliveries of new product are significantly below the 745-unit 12-month absorption rate. The growing demand for housing in the area, combined with significant housing supply constraints, is one of the driving factors behind the 2.5% current market vacancy and the 27.4% market rent growth in the MSA. The tight housing market in Bradenton continues to drive asset prices and cap rate compression. However, as you can see from the sales comps, purchasing ShoreView directly from the developer has allowed us to purchase this asset at a great basis, with even older Class A product in the market trading not only higher than our going-in price, but also higher than our projected exit price. Investor demand for properties in the area continues to remain strong. I know of 2 more Class A assets in Bradenton coming to market in January, with pricing guidance above $400,000 per unit. And given our experience bidding on other assets in the market, I expect these properties to trade well above guidance. ShoreView really is an irreplaceable asset, much more than the sum of its parts. A well-located, gorgeous waterfront property with resort-quality amenities and quality new construction with superior unit finishes. Fitness center, game room, outdoor kitchen, screened-in patios, resort-style pool, garages, storage units, and elevators. Added to this is its location within the $7 million Riverwalk expansion, providing unmatched neighborhood amenities, a mineral springs park, open market event space, Riverwalk connecting the property to downtown Bradenton, and a second park with kids' play equipment and green space for the dogs to run. Investors will receive an 8% cumulative preferred return, after which cash flows and proceeds from sale will be split 70% to the investor and 30% to the sponsorship team. In addition, as direct investors in a limited partnership, investors will also receive tax benefits from cost segregation, bonus depreciation, and paper losses. The cost for this project breaks down as follows: $73 million for the purchase price of the property, $2.8 million in closing and soft costs, $913,000 acquisition fee, $816,000 working capital and contingency funds, and $580,000 of capital expenditures. Sources of funds for the project will consist of a structured debt piece for $64.6 million and $13.6 million of equity, 50% of the equity being provided by our joint venture partners, InvestCore. The structured debt will consist of a senior note and a mezz note. The senior loan will be a 70% LTV or 65% stabilized LTV loan from Prime Financial. With $51.1 million in proceeds, the loan will be a 48-month term, interest only, and a 12-month extension. With a floating rate of 285 basis points above LIBOR, we will purchase a 50 basis points rate cap ahead of closing, capping the interest rate at a maximum of 3.35%. Our rate as of closing will be 2.95%. The mezz piece will be a $13.5 million loan from Pearlmark. Pearlmark is a private debt and equity fund invested in 52,000 apartments and residential units. The loan shall be interest-only full term and coterminous with the senior note. The mezz loan will have a 6% current pay rate and 4% accrued rate due when the loan is paid off. The leverage of the total debt will be 83% loan to value or 75% loan to stabilized value. Projected investment returns based on a 5-year hold are a 1.93x equity multiple, 18.6% average annualized return, and a 15.5% IRR. Investors receive an 8% cumulative preferred return. Based on a $100K investment, year 1 distributions from cash flow are projected at 6.5%. Year 2, 7.4%. Year 3, 7.5%. Year 4, 7.6%. Year 5, 8.5%, with a $100K return of capital and $55K proceeds from sale. As I mentioned earlier, LPs will also receive tax benefits from depreciation. Madison Spec has done a preliminary analysis and projects $75K of tax benefits in year 1 per 100K investment and $120K over the life of the deal. We are targeting a closing yet this year, so year 1 tax benefits will be available for investors in their 2021 tax returns. It is important to note that although we have modeled a 5-year hold, our asset management team will execute the exit strategy that best mitigates risk and maximizes investor returns. If the current market trends and rent growth that we are experiencing on our other assets continue into the future, we may exit via sale or refinance in year 3. If the expected housing demand pressure continue long term, we may look to refinance and return investor capital in year 5 and hold longer term and collect cash flow. To ensure we're able to provide the best risk-adjusted investment opportunities to our investors, we have a few metrics we like to run sensitivity analysis on, including cap rate and organic rent growth. CoStar has average year-over-year rent growth for the hold period projected at 7.9%. Yardi has year-over-year average rent growth at 6.4%. To maintain our conservative standards in our underwriting, we set average organic rent growth at 3.25%. Using this as a baseline and cross-referencing with the reversion cap rate, we've created these sensitivity tables to show both average annualized return and IRR. We have a worst-case scenario of rapid cap rate expansion combined with below projected rent growth yielding an IRR of 13.4%, ranging to a best-case scenario of continued cap rate compression and rent growth exceeding our projections, but still below that of CoStar and Yardi, generating an IRR of 17.6%. Looking at cap rate, we have a worst-case scenario of rapid cap rate expansion yielding an IRR of 12.6% to a best-case scenario of continued cap rate compression yielding an IRR of 18.4%. Looking at average annualized return, we have a range from 15.5% to 21.9%. Applying the same cap rate sensitivity, we have average annualized return yields ranging from 14.3 to 23.4%. Review of the key investment details. ShoreView is a 2021 built 216-unit Class A multifamily community, well located in Bradenton, Florida. The property is currently 97% occupied and 100% leased. The market vacancy in Bradenton is 2.5%, projected to compress to 1.7%, as the tight housing market continues to experience pressure from growing demand driven by some of the top inbound migration rate in the country. 40 days ago, when the property was put under contract, it was 70% occupied. Today, it is 97% occupied and will be 100% occupied at closing. The property runs at a 74% break-even occupancy and a 1.33 DSCR. Fees for this project consist of a 1.25% acquisition fee, 1.5% asset management fee, and a 3% third-party management fee. A review of the investment returns. Investors will receive an 8% preferred return. Returns for the project, 1.93x equity multiple, 18.6% average annualized return, and a 15.5% IRR. ShoreView is an excellent opportunity to invest in an irreplaceable core asset in one of the top growth markets in the country. Rents of the property are currently $200 to $400 under market rents, and ShoreView also presents further upside by stabilizing other income by integrating amenity tags into the rent roll, bill back of water and sewer, and integrating standard pet fees, as well as renting garages and storage units on the property. There are significant barriers to entry for competition and no new deliveries of competing product in the area. And all components of every structure are under warranty, mitigating the risk of excess repair costs and lowering operating expenses.
All right. So what happens after you invest in the deal? Well, we do our best to exceed expectations. You'll be receiving monthly progress reports on the property, business plan, as well as market updates. And of course, we'll be providing monthly and quarterly financials. You'll receive quarterly distributions beginning 6 months after close, and your preferred returns begin to accrue from the day of closing. We definitely pride ourselves on our communication and transparency, so we are always available to answer questions or address any concerns. We will be sending out the recording of this webinar. Also in there will be a link to the portal, which will walk you through all the steps you will need. In fact, that link was included in today's webinar reminder if you'd like to get started right away. Make sure you complete your user profile, which tells us how much you're investing, how you'd like to receive your distributions, among other things. And of course, this is where you will review the PPM and subscribe to the deal. We'll review and confirm your subscription and send an email back to you saying that we're all good. Funding instructions will be included in there as well. And the funding deadline is set for Monday, November 22nd. But I always tell people deals can fill well before the deadline. So don't wait until the very end. Don't want anybody to get left out. Minimum investment is $75,000. The max is $1 million. This is open to both accredited and non-accredited investors. You can invest with cash, of course, but for those that are not aware, you can invest with a self-directed IRA, solo 401k, trusts, and LLCs as well. Again, we expect subscriptions to fill up quickly, so it's important to complete documents and wire funds as soon as you are able. So regarding the investment portal, if you're already registered to the portal, just enter your email and password. If you're not, go ahead and get registered. The best way to be walked through the steps is to click on that aqua blue invest button that you see there on the right. Don't worry, you will not be committing funds by clicking on that button. It just walks you through the steps in the right order. I'll also provide a how-to video for the portal in an email that I send out. I'll send it out with the portal link. And if you get stuck or have questions, just reach out to me. And that goes for any matter, of course. So there you can see our contact info. Should you have any questions, you can email me direct at rick@fortressfederation.com also. And that about wraps up our presentation. So with that, we're going to open it up to questions. And again, if you can avoid the chat, we'd rather use the Q&A so we can be sure to see all of your questions. So let's see here. We got some questions.
Yeah, I'll jump on this first one here.
Okay, go for it.
With the Bradenton property located in very close proximity to the water in the bay, is there a plan for flood insurance? So is this already factored in? Yes, we have flood insurance factored into our pro forma, although one of the advantages of being a new build is to get these permitted. You have to get elevation certificates. So each of the structures on the Bradenton site actually sits 8 feet above the floodplain. And the minimum requirement to not have flood insurance being required is 2 feet. So although we're not required to have flood insurance, we are purchasing it. So it will cover any damage to the property from hurricane, flood, wind-driven rain. Additionally, any loss of revenue due to damages from those losses.
All right. You see the second one here. What is the current average rent at the property for each of the following categories? In place, effective rent, market rent, and pro forma rent. You have that offhand?
Yeah. So the effective in-place rent is on average is $17.74. Market rent is $21.46. as well as our pro forma rent. We're just planning on bringing these rents to market.
Okay. Is the average organic rent growth on top of the pro forma rent?
No, it's a contributor to the pro forma rent.
Okay. I have one from the chat I'm going to ask, and then I'm going to turn it over to you because I cannot access the Q&A from beyond what I just read. So here's the one from chat. Can you go into further detail about the tax write-off implications?
It'd be best to consult your CPA on that as to how exactly they'll pertain to your situation and what they could be applied to. But generally, they will offset passive income, definitely all cash flows from the property, as well as any other passive income you may have. In certain scenarios, they can be taken against earned income.
Okay, cool.
There's another question later on about taxes as well. How did we project taxes? So I think Ryan mentioned that we got Madison Spec to undertake a cost segregation study, an initial cost segregation study. So they look at the building, they allocate all of the assets into 5 year, 7.5 year, 15 year, 27.5 year depreciable items. And they identify what the depreciation would be in each year of hold. They give us an estimate, and then post-closing, we get them to do a full study where they spend a lot more time understanding the assets at the location and then calculate the depreciation by year.
Carry on there, Warren. I can't see the lower ones.
What is the acquisition cap rate? It's a little different because the property's only been in commission for 5 months. So if you take the 5 months of income and normalize it, we're looking at coming in at about 3.8% cap rate. Looking at the sales comps, we have trades of comparable properties anywhere from 3.5% up to 4.2%.
Another question is, what are the square foot rents on your other Class A property in the market? And how does that contrast to the ShoreView current and pro forma number?
If you include, keeping in mind, Oakwood's encumbered by Allura, so 25% of the units are affordable housing. So including those on average, we're running like $1.83 per square foot. If you back out the affordable units and only go with the market rate units, you're sitting at about $1.94. And then if you just go to recent leases of renovated units, depending on unit type, you're sitting anywhere from $1.99 to $2.05.
So another question, why are current in-place rents below market, and why are you confident that you can increase these rents to pro forma? So the reason that current rents are below market is because the developer has built this property and leased it up in 5 months. Developers have an incentive to get occupancy high and to get out of their construction loans as soon as possible. And they tend to do this in one of two ways. They either offer concessions or they offer rents that are below market. In this case, there are no concessions, and they've leased up the property with rents that are $200, $300, $400 below market. The reason we know that, and the reason that we're confident to get to pro forma, is because we've undertaken multiple comp surveys. We've visited all of the properties in the surrounding areas. We've walked those properties, spoken to the property managers there. We understand the rents that they're getting in these properties, and we're confident that we can position ShoreView within that comp set and achieve the pro forma rents.
Okay. How long will the Riverwalk construction be, and how will it affect demand of this property, which is adjacent to the construction? It's a tough one to answer, huh? So it is well underway.
Yeah. I'd expect the majority to be completed in the next 90 days. When we were down there, the biggest project was that Natural Springs Park, which is well underway. Mm-hmm. The rest of it's pretty easy to tidy up, mostly just actually forming the Riverwalk, pouring concrete.
Did we answer what was the average rent for the most current leases? Get to that one.
Most current leases, I was looking at this earlier, Rick. Keep in mind, we only have a 5-month track record, but from when they started lease up to the most recent leases, we're seeing an increase of $200.
Who's the current owner?
Hatfield Development Company, the builder, and they're a merchant builder, so they're not really owner operators. Their whole business plan is build, stabilize, and sell.
Who do you see as being the buyer of this property? It's institutional, huh?
Yeah, definitely. Given it being a core asset in its location and being a brand new build, it'll go back to a large institution or family office. The guys that we spend a lot of time bidding against, trying to buy other properties.
This is your chance to get your questions in. If anybody has any more questions, going once. Okay, well, we really appreciate you people coming on with us tonight. Realize it's dinner time for some people. It's getting close to bedtime for others. So we really appreciate you spending the time with us here. I hope we got all your answers, all your questions answered. And just like to thank you. And Ryan and Warren, would you like to say something?
No, thank you for your time. If you have any other further questions or anything comes up, don't hesitate to reach out. We're here and available to answer any questions.
Thanks everyone for joining tonight. Yeah, as Ryan mentioned, we're always open to running through further detail. Hopefully you've got some interest, and we look forward to communicating with you guys soon.
Yeah, and look for that email tomorrow. I'm going to send out all the information that you'll need. And if you have any other questions, by all means, give me a shout. So thanks, everyone.